Every trading chart has two colors, green and red. But what do they actually mean? Most beginners see these colors and guess. Professionals read them like a language. In the last lesson, we learned that every candlestick tells a story. Today, we learn how to read their direction. Let's start with bullish. A bullish candle is green. Price opened at the bottom and closed at the top. Buyers were in control the entire time. Now imagine a tug of war. Buyers pulling the rope up, sellers pulling it down. On a bullish candle, buyers won. They pulled harder, held longer, and price closed in their favor. That's bullish energy, confidence, strength, momentum. Now bearish. A bearish candle is red. Price opened at the top and closed at the bottom. Same tug of war, but this time sellers won. They pushed price down and held it there. That's bearish energy, fear, weakness, sellers in control. Now here's the mistake every beginner makes. They see one green candle and immediately think, price is going up, time to buy. They see one red candle and panic sell everything. Here's the truth. One candle means nothing on its own. Real charts are never all green or all red. They mix. That's completely normal. What you're looking for is which side is winning more often, because that tells you the real direction of the market. Think of it like a game score. One bad play doesn't lose the game. What matters is who's winning overall. Look at this chart. When buyers consistently push price higher, the market is showing bullish strength. Now look at this. When sellers consistently push price lower, that's bearish strength. This is how professionals think, not one candle, the whole picture. If you can read bullish and bearish candles, you're already ahead of most beginners. But here's what most people miss. Two green candles can look completely different. One tiny, one massive, and they do not mean the same thing. Candle size changes everything. That's exactly what we cover in the next video.